Watch our podcast, Real Estate Insider, Where America Goes for Funding. Appreciate all of you guys watching the show and the channel. Okay, here I've got a little bit of glare. Let's see if I can fix that. Hopefully you guys can see me okay. I think there's just a little bit of glare in the camera, so let's see if I can fix that a little bit. It's Thursday night. It's what is it? It's about 8 o'clock Central Time. I don't know where you guys are at in America, but it's 8 o'clock Central. Just want to. That glare is bothering me just a little. Hey, Kevin. Good evening. Thank you, buddy, for tuning in. Give me a second. I want to fix that. If I can fix that glare real quick. So. All right, that's a lot better, I think. Okay. Oh, maybe not. That's worse. So, all right, we're just going to have to deal with it. So, appreciate you guys tuning in and watching the channel with Angelo Christian. It's Thursday. It's 8 p.m. Central, and we got a lot of new stuff that we want to talk about, new programs that are coming out for 2024 that we're very excited to be discussing with you guys. It's kind of cool how the year is ending. Interest rates are on the downward trend. New programs are coming out. And, it's crazy that, always through suffering and pain, there's opportunity for, new stuff that emerges and arises. I guess that's part of evolution. And it sucks to kind of go through pain. And a lot of athletes talk about that pain is weakness leaving the body, and emerging, succeeding, and the stronger survive. And that's what the last kind of 2 years in this inflationary environment has kind of taught us, is that rates went up, home prices went down, the economy was kind of teeter-tottering in a recession. A lot of companies didn't make it. Some companies thrived and flourished. So, what I'm saying is that I think next year is going to be a lot better for the real estate market. Interest rates are going to potentially go down. Obviously, nobody knows for sure how much, but I can already tell. I've been in the business now for 2 decades, kind of seeing these cycles. It looks like the market's going to take off and get busy again. And we have, all kinds of programs are coming out. Like right now, you can buy a multifamily property, which is crazy, a 4-unit with Fannie Mae with only 5% down. So they're pushing stuff to kind of get things going. Before, if you try to buy a 4-unit property, you had to put 25% down. And it went all the way from 25% down to 5% down. So that's a huge difference in the down payment requirements. So if you think about why that happens, is these government programs, lenders, they want to stimulate the economy and push people to go out there and invest and buy. We have a new program that we're rolling out, an ultra super jumbo. For your primary residence, you can buy a house up to $10 million. It's crazy. If you think about it, these type of new programs coming out, $10 million home loans with only 35% down. You can do private loans, no doc loans, full doc loans, bank statement loans, 1099 loans, all that program. But that's, pushing people to go out there and buy those ultra luxury expensive homes. We also just rolled out a $7 million investor cash flow DSCR loan. Some of these properties, in New York, Los Angeles, South Florida, Miami, you can collect rents a few $100,000 a month on some of these ultra luxury rental properties. You see some of these condos, high rises in Miami or New York or whatever, even Hawaii, or some of them throw off huge cash flow. And we have those programs that are now available for you. So even though it looks like in some of the news and the trends that this stuff's going that way, lenders and programs and investors, there's more stimulus and more stuff coming out to get people to go out there and invest and do things. So that's what I'm trying to say. And a lot of that happened too in 2005, 2006, 2007, and then when 2008 happened, a lot of mortgage companies, a lot of businesses went under, and then all these new programs and initiatives and stimulus came out. So you're seeing a lot of that again. Another one that just came out that we offered is a $4 million interest-only loan. Interest-only, usually you'd have to put 20% down. Now we can do it with as little as 10% down and go up to a $4 million loan. And you can do it on your primary residence and investment property. So that's a very, very strong program for investors out there. A lot of investors prefer to do interest-only because the payments are about 15% cheaper, so they can have a better NOI, a better cash flow on their deal. And because they really just care about the cash flow, and a lot of times they're just going to hold the property for 5 to 10 years and then sell it. They're not as concerned about, like principal reduction. They're more worried about their cash flow. So that's another hot product. Another one that's really hot that a lot of investors love to do is fix and flip. Fix and flip is a great program for people out there that know what they're doing. They're experienced real estate investors. They have a crew. They understand cost budgets, contracting, rehab. Hey, Matt. Sure. Matt, talk show. Thanks for asking the question. And actually, I was just going to talk about fix and flip loans. For fix and flip, one thing that for people that are out there that are in that space that do that, if you got a good crew, your experience will go up to 90% loan to value. You only have to put 10% down, and you can get 100% for the rehab. Now, like what Matt's asking about, what are hard money loans? And what's happened a lot in the space is that private lending has kind of taken over the new acronym for hard money. They want to get rid of using that term because it has somewhat of a negative connotation. Hard money is not bad. It doesn't screw people. It doesn't rip people off. It's there for a very specific reason, and you just have to utilize it for a catalyst as a tool for what it is. You don't stay on hard money loans. Yes, it's more interest rates. Yes, it's more fees. And people always ask me that are not in the space, like, why would anyone do that? And this is because they don't understand, and that's okay. That's why we're here to educate people and make sure they do understand what hard money is. Basically, it's an asset base. It's a short-term financing to take you from point A to point B. Like, for example, an investor that wants to do a fix and flip, usually the property's all jacked up. So a bank's not going to finance that. You can't sell that to Fannie Mae. You can't do FHA. So there has to be some type of alternative financing, right? They're going to take this property. It's worth $300,000, but it's all messed up. It needs $100,000 in repairs, but the property, is worth $700,000 after it's all fixed up. Well, that looks like a good opportunity if the person managing the project is qualified and capable, right? Well, if you have somebody that's an experienced flipper, they know if they buy it for $300, they put $100 into it, they got $400 into it, and they can sell it for $700. Now they're going to have to spend $30,000 for the loan, spend $50,000 for the realtor. So now they're in it for $480, right? Well, they're going to sell it for $700. So $700 minus $480 is $220 profit, and that project they could be in and out in 6 months. So it's not a bad gig if you got a bunch of them going and you know what you're doing. So, Cedric Jones, do you still offer that loan that comes off with a line of credit with, yes. But I want to finish talking about the hard money loan because we do a lot of them. So the investor is going to spend, whatever, 10, 12, 13% on the interest plus probably 4 or 5 points or whatever. But that's not their focal point. It's the opportunity, the equity that they can make. So you have to think about it. They're going to spend a lot of money on the closing costs, a lot of money on the realtor, but they made the most in the whole deal by flipping it. Now, you only do this if you have a good upside. You're not going to go do all this work and make $10,000. You got to have a lot of equity in there, and it's got to make sense. And that's why you have to really, really know what you're doing or partner with somebody that knows what they're doing. I don't recommend going out there and doing this whole thing and you've never done this before, and that could be probably a disaster. You need to learn, and I think you need to partner with somebody that knows what they're doing. So I hope that answers your question, Matt, on hard money. You just have to be smart with it, okay? You're not going to go buy your brand new dream home with your family and with a hard money loan. That's not what it's for. You know. So anyway. So I hope that answers the question. They're usually, they're short-term loans. They're like 6-month, 12-month, 2-year loans. But they do make a lot of sense for the right case. Okay? But they are more expensive. But the reason why is because, that for that loan in that example, they're giving you the money to purchase the property and they're giving you the money to fix up the property. And a lot of lenders don't like to mess with that because it's messy. Because you have to go out there and inspect the property, do draws. It's a lot of work. We do them. We enjoy doing them. But that's our business, right? So now Cedric was asking about a line of credit. So yeah, we do lines of credit. You can do lines of credit on a primary residence. You can do lines of credit on a secondary home. You can do lines of credit on investment property. We have a lot of different lines of credit. You can do a first lien HELOC. You can do a second lien HELOC. We have 10-year terms, 20-year terms, 20-year amortizations, 30-year amortizations. And those are just, different how the loan is structured. Basically, the bigger theme on line of credit. Do you also? Yes, we do. Hi, Dane. I hope I'm pronouncing that right. Dane. Yes, we do 203K. We also do home style, which is the conventional version of the 203K. We do the 203K limited, the 203K full, and that's a great program too. That's if you're going to live in the house. Then you can do the 203K. The 203K is not for investors. It's only for if you're going to live in the house. So yeah, we do that. But going back to Cedric and the line of credit, basically, a line of credit is just like a credit card. But it's much lower interest rates. The rates can be anywhere from 7 to 9% right now. Historically, they're around 4 or 5%. They're usually attached to an index like the United States Treasury or LIBOR or SOFR, which is just an index for interest rates. So they move with whatever those markets are doing. But basically, you only pay interest when you draw from the loan. So let's say you get a $500,000 credit line. Now, that doesn't mean you start paying interest because you got a $500,000 credit line. Just like when you get a credit card, you might have a $30,000 credit limit, but you're only paying interest when you draw from it. See, a mortgage is different. As soon as you close, you got to start paying interest on a mortgage. But a line of credit, you do not have to do that. And then if you pay off the line, like you pay down your credit card, if I pay down $10,000 on my credit card, you can take the money right back whenever you need it, right? So you don't let that interest sit there and accumulate. You pay it off whenever you want to, right? So that's the benefit of having a line of credit. And typically on primary residence, they'll lend up to 80%. On investment property, I live in New York, so it's expensive. I've been saving before I came to you. I'm scared to show up. Yeah. Well, we have, the Dane, we have down payment assistance program in the state of New York too. You can get up to, well, it depends on, the purchase price of the home. In some houses in New York, probably up to $50,000 for down payment and closing cost assistance, just depending on the purchase price to help you. I don't know the details of your file or your case, but there is closing costs and down payment assistance available. So we have to take a look at it to see how we could help you out with that for sure. But we do lend in New York, so we can take a look at it and see what you got to figure it out. Just call or text us 832-431-6331. Then we can discuss it to go over to come up with a game plan to help you out. But anyway, Cedric, I don't know if that helps kind of answer your question. I think it's the greatest thing that you should do is getting a line of credit. I think it's very smart to do. It makes a lot more sense than having a mortgage. Thank you. Yeah, give us a call or text us. There's no fees to apply. We don't do a hard credit check. We just do a soft check. So we'll come up with a game plan to help you. We could look at different options. Like we have programs to help give you up to 2 months no house payments, get your closing costs included. There's down payment assistance. We go down to a 500 credit score with FHA and VA too, so that's really strong. We got great rates, great service. We're open 7 days a week. All of my team. You're welcome, Mr. Cedric. The line of credit's a great product, and I highly recommend it. The one thing that I will say, just so you guys are aware, so the difference with the line of credit is that, and it is what it is, it's a full documentation loan. So you got to use full docs. You have to use taxes or W-2s to qualify. You can't do a no-doc line of credit. They don't offer it right now. I wish they did, but they don't. So, but it comes with a bank account, and you make your deposits in there. You can pay off the loan as fast as you want. It's really a no-brainer, really. Sure. So a 203K is just a renovation loan, but that's if you live in the property. See, if you live in the property, FHA, HUD has renovation loans because they know a lot of older properties are messed up and they need to get fixed. So they rolled out this renovation loan called 203K. So it's only for if you live in the property. I have assets such as Bitcoin. I'd like to move to a new house, but saving for down payment is so hard. Well, Matt, you can get the house with down payment assistance. You don't need to put any money down. Most of my customers that use down payment assistance, they don't put any money down, or very little. Let me rephrase that. If they do, it might be a couple $1,000 if you're using down payment assistance, because you get 5% down payment and closing cost assistance, and then you can either have the seller pay the rest of the closing costs or roll them into the loan. A lot of people think that they need all this money to buy a house, and it's just not true. I don't know, because I don't watch other people's stuff, like their media and marketing, and I don't deal with other mortgage companies, but I think that from just talking to people, like people are so worried and scared that they're going to get denied, or they're going to have to put all this money down. And I think that probably like a lot of lenders think like that. That they're telling their customers they got to put, have 800 credit scores and put 20% down. And I know, like before, when I was younger and before I got into the mortgage business 20 years ago, and I tried to get, you guys see my cat in the background. That was my cat, Simba. Hey, Alejandro. Yeah, HELOC, you need to have at least a 680 credit score for a HELOC. Your middle credit score has to be 680 or higher. No, the income, no, Cedric, the down payment assistance is not income based. You do not have to be a first time buyer, and there's no income limits. You can make as much money as Elon Musk and apply for a down payment assistance program. They don't care about that. So it's a good question. A lot of down payment assistance is income based. This one is not. But going back to the 203K, anyway, it's an FHA loan. The limited basically is if it needs limited repairs. The house needs a little bit of repairs under $35,000. It's an easier, faster renovation loan, but maximum. Okay, I'll talk to you about that in a second, Alejandro. Yeah, it's a good question. On the 203K limited is $35,000 max, easy, wrap those into the loan. When you buy the house, you get the money for the rehab wrapped into the loan. So let's say the house is $200,000, you need $30,000 for, I'll answer both of those questions. Yeah, so limited, you need cabinets, you need flooring, whatever, appliances, to say 30 grand, 35 grand total, you're good. Now, if you buy a foreclosure like you're talking about, it needs a whole new rehab job, major stuff, foundation, roof, plumbing, all that stuff, that's a full 203K. And let's say you need $200,000 for rehab. It's a big project. Well, then you have to hire a 203K consultant. They're licensed by HUD, and you have to meet with them, with your contractor on the property. And you're going to get a bid from the contractor, and you're going to get a bid from the consultant. And these are like for major renovation projects. Again, this is not for investors. This is if you're going to live in the house, okay? So the full one is just bigger scope of work, and that's it. It takes longer to close. Those loans take about 60 days to close. There's more involved, which is fine. Usually the properties that are really messed up, I was told a year of home buying, 720. It's not a public adjuster. They work for HUD. I mean, they don't really work for HUD. They're contracted out by HUD. They're just contracted out by them. Okay, but usually, those houses that need a lot of work, there's more opportunities in those houses. So we do both of them. It's cool. Whatever, just depending on what your project is. It's not a big deal either way. Let me go talk about these lines of credit real quick. So houses are going between 400,000, 700,000. Yeah. See, for someone to buy a $400,000 to $700,000 house, let me just tell you, if you want to buy a $400,000 house, and I've done videos on this, so just so you guys know, you have to be making minimum 70,000, 80,000 a year. If you want to buy a $700,000 house, you have to be making, minimum 120,000 a year, minimum. That's the thing, right? Because they look at the income ratios. So, going back to the HELOC thing though, the other requirements besides the credit is for the HELOC is you have to have its full documentation, like I said, at least for the investment property 680, primary residence at least a 660 score, maximum debt ratio 45%. They like to see 6 months reserves. I saw some questions on the down payment assistance. Let's say you get the down payment assistance and you get $25,000. So the way it works is that $25,000 is tacked onto the back end of your loan, and you have to make the monthly payment on that. Now, the way it works is, so you have let's say your house payment's $1,000 a month for purchasing the house, and then you got $25,000 of assistance. You have to make that monthly payment wrapped in there too for the $25,000, and let's say that payment's $60 a month. Now, what happens is that down payment assistance is forgivable. So after you live in the home for 3 years, they wipe it away and you no longer have to pay it. It's forgiven. But if you sell the house within 3 years, then you have to pay back the down payment assistance. All right? And the other requirements are you have to have at least a 620 credit score, minimum of 620. You do not have to be a first-time buyer. There are no income limits. It can be for single family, mobile home, double wide, or single wide. It can be for a condo or a duplex. Your maximum debt ratio is 50%. 2 years of income verification. This is not a no-doc loan. This is a full documentation loan with W-2s or pay stubs or taxes. And you do not have to be a first-time buyer. So it's not a trick, it's not a con, it's not a gimmick, it's real. We do a ton of it. It's great to help people with it. And listen, it's not for everybody, but for some people that, can afford the monthly payment, but they don't have a lot of money to put down, it's a very good program. And that's why it's here. It's totally legit. It's not, BS or no. We wouldn't do it if it was BS. It makes a lot of sense. But like I said, if you have money to put down, then you don't need it. But it's there as a really good program, and we really like it. We've helped a lot of people with it. So, but those are the requirements. I don't know if I think that answers your questions, though, what you're asking about. And we do all these different programs. You know, we lend nationwide. We have, you know, commercial, residential, private lending. We're here as your lender, your source for finance. We want to be able to here to help you with it. We've been doing this for over 2 decades. You can look us up online, check out everything. You can Google us. We've got excellent reviews. We're not perfect, but we sure as hell work really hard to get it done. How much do you need on a no-doc loan? No-doc loans start with 10% down. So if you're buying a house for $600, you need at least $60,000 for the down payment. And then they want to see 6 months reserves, so you'd have to have another $30,000 in the bank for reserves. So let's just say 90 to 100K you have to show. And also that's the minimum. I'm not saying that's what you're going to qualify for. I'm saying that's the minimum for a person trying to get that loan. Again, every person's situation is subject to review and their own qualifications and everything. You know, so everybody's got a different situation. You're welcome. But like if you do it FHA, you might be able to buy the you know, it just really depends on your case. Everybody's got, you know, something going on. So, but yeah, check out our channel, check out our YouTube. We have over 1,500 videos in there, you know, a ton of information. It's a huge library. And then we have, you know, our Instagram, our Facebook. Cedric, what do you think about what will happen here in Houston area with home prices? I think Houston's great. I think it's just going to keep going up. I think Houston's a really good market. You know, if you look at it at a nationwide level, I mean, you can still buy houses in Texas for $150 a foot. And I mean, some places, man, when we lend nationwide, we see the most craziest stuff. I mean, $600 a foot, $1,000 a foot, $2,000 a foot. So more and more people are coming to Texas, and I think inevitably, I mean, Texas is going to be, you know, one of the most sought after states in America. I was laid off from my job, so that set me back. Well, just keep working at it. You know, and maybe let's look at doing an FHA loan for you. You know, FHA is good because it's flexible requirements, low interest rates, and little to no money down. You know, the one thing that's good about us, I will say, is that we work with you to figure it out. We'll come up with a route. You know, just like in football, they have a route that they got to play. We'll come up with a route to get you there to the end zone. It may not be today. It may take you 3 months or 6 months or whatever, but you'll get to the end zone if you follow the route. You know, most lenders will not do that for you. Most lenders, if you don't meet the requirements, they never call you back. Unfortunately, that's how this business is. We don't do that. You know, we'll show you a route, but you got to follow the route. You know, you may say, hey, I want this house and I want to do it in 6 months. Okay, here's what you got to do, X, Y, and Z. Then boom, 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 you got to do that, and then you get it done. You know, but you got to have that mindset too. You can't think that just because, you know, and there's a good quote that I really like, and I've always kept it with me. It's that God's delays are not God's denials. And I've always believed that, because just because it doesn't happen now doesn't mean you don't deserve it. You got to work towards it. And a lot of people think that if they can't get it right now, that means that it's not meant for them, and that's not true. In my opinion, you gotta work at it. You gotta make it happen. You gotta push. You know, and fight for what you want. And it may take some time, but the time's gonna pass anyway. So it might as well get what you want. So anyway, that's my 2 cents. Thank you guys for joining and watching. Call us or text us if I can help you with anything. 832-431-6331. Your nationwide direct lender, Angelo Christian. Appreciate y'all spending the time with this evening. Take care. God bless. Take care of your families. We love y'all. We'll see y'all again next week. Stay strong.